Hello everyone, welcome to Insurance Business TV and the Q2 edition of our Cyber Insurance Power Panel. And yes, this group met for the first time in Q1 to discuss the state of the market, and now we are back as we zoom in on all things AI. So let's welcome them, shall we? We have Ethan Gottlieb. He is Associate Partner, Head of Cyber Tech and FinTech at Consilium Insurance Brokers. And Salome Dome, Broking Manager at Talbot Jones Limited. So as mentioned at the top, this is an AI-focused discussion. So to begin, how are AI-driven cyber threats, I'm talking about things like deepfake phishing, automated hacking, AI-powered malware, how are they changing the risk landscape for cyber insurance? Ethan, I'll start with you.
Yeah, great question. I think AI tools are lowering the barrier for entry to cybercrime because gone are the days where you need to be proficient in coding or similar to be really good at a cyber attack. There have now been emerging what we call script kiddies, who are basically teenagers who can deploy sophisticated tools and attacks. You only need to look at MGM Resorts, which is the case from late 2023, where a 17-year-old was arrested for his role in the attack as part of a group called Scattered Spider, who have targeted more than 100 organizations since 2022, including recently the Marks and Spencer's attack, which we won't even get into right now, but perhaps next session, as we'll be here all day, I think. So I think, yeah, the barrier for entry is definitely being lowered. I think as AI evolves and learns and ingests more data, this is enabling threat actors to scale and personalize attacks with alarming, really, speed and accuracy. And deepfakes are becoming far more convincing. I was reading a report from Ofcom saying that actually fewer than 1 in 10 people aged 16 plus say that they are confident in their ability to identify a deepfake. I know that certainly I've been fooled once or twice myself. Examples of these might include things like scam calls to model people's voices to bypass bank access, voice activated security controls, for example. So yeah, I think the scale and the accuracy of these kind of attacks, AI is making much easier. I think that means that there's a need for an evolving and a more advanced security protection, really, to keep up with the changing threats. So things like traditional email filters and user awareness training, while still important, may no longer be sufficient on their own. I think it's also important to have things like a tested instant response plan and other controls to create a kind of defense in depth model, which is, things like backups, things like MFA, things like segmentation, all under the same house and working together to have that depth of defense. And the last couple of things, I think there's an increasing curiosity and demand from clients regarding coverage related to AI, including things like reputational harm, business interruption, regulatory fallout, etc. So we'll come on to that in a bit. And lastly, I think insurers are being challenged to model for these evolving threats. Ample capacity and good loss ratios in the market at the moment has meant a continuing soft market, at least for now. But perhaps the AI threat might lead to price uncertainty in the future because it is such a fast-moving beast.
It's a scary phrase, isn't it? Script kiddies. I haven't heard that one before. So based on that, Salome, would you say that there's just more motivation for cyber criminals now because of AI?
Yeah, I would say so. I mean, what AI has done is I think it's improved the efficiency of cyber criminals in their attacks. It's made it much easier for them. Attacks are looking more genuine. For example, the phishing emails that would come through. They are very specific compared to the generic ones that would come with like grammatical errors and all those sort of things. So it's really more difficult to detect. So in terms of the general landscape, I think AI tools have also empowered the cyber criminals in terms of being able to launch more attacks more efficiently, more quickly, and more detailed.
Okay, so we've painted a scary picture so far. The criminals are getting more sophisticated, but Salome, are carriers, insurers reacting in the same way? Are they adapting the cyber policy language or exclusions to address these AI-generated attacks, especially those that are perhaps more sophisticated and harder to detect?
Yeah, I think carriers are doing that. I would probably say maybe slower than I expected. What I've seen over the few months is carriers are sort of restricting cover, especially with most of the policies that we've dealt with. Even at renewal, covers like social engineering are being taken off, higher excesses, there are higher sub limits and all those sort of things. So these are some of the ways that carriers are sort of dealing with these trends.
And Ethan, are you seeing any specific AI endorsements?
Yeah, no, I think Salom's bang on really. Some markets are beginning to explore specific AI endorsements. So the likes of CFC, Coalition, and AXA XL have all added affirmative AI wording into their cyber insurance policies over the last year, which aims to cover things like data poisoning, so manipulating data via AI, usage rights infringement, which is basically failing to obtain the right permissions to use particular data, because it can be quite difficult to know where the data comes from when using AI, right? And finally, I think regulatory violations. So any liability are resulting from non-compliance of regulation like the EU AI Act. So yes, there are definitely some markets that are beginning to address those needs. I do think, however, there is a topic of silent AI where AI-driven risks are neither explicitly excluded or included in policies, which potentially leaves room for some coverage gaps. This is similar to silent cyber, which has been prevalent over the last few years, which hopefully for the most part has been ironed out now by Lloyd's and most of the markets. But as AI is still new and developing, I think a discrepancy between what is happening and what insurance are expressly including is potentially arising, particularly really deep fakes and synthetic media, because the rate of development is very quick and it's difficult to change products so quickly to adapt for that. But I do think policy wordings are also being scrutinized to clarify how intent is handled when AI is used as the vessel for an attack. So that's leading to some discussions around attribution, and those discussions are becoming increasingly more complex. It can be very difficult to know who or indeed what caused the harm, i.e. what is the origin of the attack, if the attacker is using autonomous AI.
And what about underwriting processes, Ethan, as well? Have they evolved effectively to assess a client's use of AI technologies, I suppose, both as a security defense and as a potential risk?
Yeah, I think AI is what I like to coin a double-edged sword. So it can be used in equal measure for good and bad, including for underwriting and broking processes, right? So, for example, within Consilium, we're using AI and large language models to build our own in-house insurance productivity suite, which is pretty cool, which makes use of the best parts of the capability of AI technology, such as sifting through large volumes of information and also increasing efficiency in assessing risk, as well as horizon scanning. So having said that, I think whilst there is growing awareness, there isn't yet consistent maturity in how underwriters are asking about AI usage. For example, some clients will be using AI for things like threat detection, but underwriters aren't always asking how well these are configured or monitored just yet. So whilst underwriter tools and questionnaires are evolving, many still lack specific questions on AI governance or risk controls. On the other hand, I think generative AI is being used quite widely in business processes already. So things like in chatbots, in customer service, code generation for software developers, et cetera, et cetera. So that is opening up new exposure points that may yet be a bit underassessed, but I do think we'll catch up to that. And that's why I think as brokers, it's very important that we ask the right questions of our clients. It's not really what AI they're using and more so how it is being used. Framing the usage under the wider risk narrative, I think, is quite key.
And Salome, are you seeing any insurers take the lead in this area?
I think I would probably say Coalition and CFC have really done well in that. But in terms of general proposal forms and then asking like the right questions, client involvement with AIs and all that, I've not really seen much. What we are doing are probably as brokers, engaging the client to understand what they are doing really well, getting those details, and then sometimes feeding that to underwriters, which probably might lead to other questions. So we're able to get underwriters to understand and assess the risks properly in terms of AI exposures. Yeah.
So we've talked about the risks, we've talked about underwriting. I think we should probably touch on claims as well. So Salome, have you seen any claims related to AI specific incidents, perhaps such as synthetic identity fraud or AI created content that could cause reputational harm? And indeed, how are these incident response vendors adapting to handle the complexity of these attacks?
Yeah, should I say, fortunately, we have not had any of such incidents or claims from our clients in terms of cyber coverage. But what we've identified is AI in other areas. So, say, for example, like in motor claims, where you can see that invoice manipulations and generations to sort of overflow, increase the claim value and all those sort of things are something that we've identified and in discussions with insurers. Yeah.
And are you seeing any emerging trends in the AI area as regards to claims, Ethan?
To some extent, yeah. I think from my point of view as a broker, there seemed to be an emerging trend of claims tied to impersonation or AI. So not just emails, but cloned voices and video deepfakes that are being used in social engineering scams. Thankfully, none that have happened personally with me or my clients, but I have read about in these kind of scams, including romance scams. And recently, a San Diego lady from San Diego lost her life savings in a Keanu Reeves imposters romance scam. And similarly, a French woman was duped out of 850,000 euros by scammers posing as AI-generated Brad Pitt in hospital. So it is happening out there, maybe not under mine or Salom's books, but it is happening. I think, fortunately, though, social engineering is covered fairly broadly by most cyber insurance policies. My final couple of points on the claim side would be the importance of reputational harm cover coming a bit more to the fore, and that's becoming more and more apparent. It's not just data breach notifications that can result in business interruption loss. Adverse media attention following a data breach could also result in losing customers and also loss of private contracts as well. For example, if a fake CEO video goes viral, or AI generates misinformation about your company that's spread online, that could have an impact on your reputation as a company. And therefore, it's imperative that businesses that collect or process data do have that kind of reputational harm cover on the cyber insurance policies. It'll be interesting from a claims perspective to know from an insurer's perspective, I suppose, whether incident response vendors might now include things like media monitoring, legal support, that kind of services to manage the fallout of AI generated content when it does go wrong.
I think if there's perhaps one takeaway from this call, it should be that Keanu Reeves and Brad Pitt do not need your money, everybody. But one final question for you both. What do you think the next major AI-related challenge will be for cyber underwriters and brokers, perhaps over the next 12 or 24 months? What do you think it will be, Ethan?
I think education around cyber and AI risk needs to be front and center for us as brokers. There's no doubt at all that cyber attacks are increasing and the global cost of cybercrime is skyrocketing. It's predicted to be 10.5 trillion by the end of this year, which is a 7 trillion increase since 10 years ago in 2015. So if measured as a country, cybercrime would be currently the third largest economy after the US and China, which I think is always quite an interesting stat. I think from a challenge perspective, recent media attention, including the attacks on M&S, Co-op, and Harrods, have brought into stark focus how devastating a cyber attack can be. But having said that, I think AI is a real challenge for businesses as well. According to Forbes, 87% of CEOs believe AI benefits the workplace, but 75% of executives fear their companies will fail within 5 years if they don't implement it correctly. And from an insurance perspective, only a third of businesses, less than a third, 31%, CFC say, feel confident that their insurance covers AI risks effectively. So clearly there's demand growing for insurance that keeps pace with this AI technology, but we're still seeing a crucial lack of understanding when it comes to AI risk at a time when the majority of businesses are already using the technology. So that's why I say that education, I think, is really important. And as an industry, we need to do what we can to close the protection gap. So whether that's continuing to build AI protection into policies, both affirmatively with things like clear wording in policies, but also silently covering exposures even when they're not explicitly mentioned. So yeah, I also think final couple of thoughts, I guess, modeling non-malicious AI risks. So think of things like system failure rather than security failure. That is where there's not necessarily been attack, but where a system's failed and that's led to a loss. You only need to look at CrowdStrike from last year to understand how big a scale that can be when it does go wrong. And I was at talk at BIBA 2025 recently, and the one thing I took away from a talk on the value of insurance brokers, which was a really interesting chat, which is basically saying that in a world of AI, human connection is the only thing that actually helps broker survival. So as brokers, we have to redefine and demonstrate our value as trusted advisors and obviously as empathetic human experts as well, right? People want to buy from people when it comes to quality and services. So there will always be space, I think, for brokers and those relationships. But we do need to be aware to this new technology, because in a couple of years, it might be you say to your Amazon Alexa, buy me some new business insurance, and it will know everything about you and do it. So how do we keep pace as brokers with that technology? Well, it's through human connection and relationships. So I think that's going to be the greatest challenge for us as brokers in the new world.
All right, so connections very much at the forefront. Salom, education as well?
Yes, I mean, I would always advocate for education, because I think one of the problems about AI is it's not what it can do, but its ability to evolve so quickly, so rapidly, and all that. So, staying on top of the game is very important. So, being educated, making resources available to both ourselves as brokers and then also to clients. That's something that I'll probably give Coalition a tap on the back for. So they have this the Coalition Control, which gives access to like lots of resources that we as brokers can also use and also share with clients in terms of being educated, staying on top of like what's happening, trends, and all those sorts of things. So yeah, I think that's one of the main big things that we need to be focusing on in the next 12 to 24 months.
Well, huge thanks for your time both. Clearly, there will be rapid developments in the AI and cyberspace, so be sure to stay tuned for the latest developments and keep it right here at Insurance Business TV.